Hey, rich friends, it's your girl Cha Cha reporting live from the Money Mantra, and we are back with another Forex education video. I created this channel to help as many people as possible become independent and profitable traders. So, if that's something that you've been looking to do, welcome back to my channel. You are definitely in the right place. Now, I specialize in making quick charting videos that review fundamental concepts that every trader should understand if they want to be profitable. Now, you don't have to understand every single thing, but things like market structure, candlesticks, and when to enter and exit your trades are going to be important to any trader, no matter which market that they're in. Now, another fundamental thing that should be talked about more when it comes to trading is proper risk management. Now, you've probably heard this term, or maybe you've never heard this term, but proper risk management is a way that you are managing your trades and managing your money. You don't want to be over leveraging or putting more money than you have to into a trade. A lot of people tend to get turned off by trading because they're losing too much money. They're not using the appropriate lot sizes or risk amount. They're not setting their stop losses and take profits at places where they can actually secure profits or cut their losses, and they stop trading. But I feel like if more people understood that you can control your risk and you should control your risk, it would encourage them to work on that. Because if you've seen trading work for other people, it can definitely work for you as well. You just have to grasp these fundamental concepts. So today we're going to be talking about gold. Gold is a metal, right? It's an asset that you can trade in different increments. You can scalp it, right, on a time frame as little as 1 minute. You can day trade it on higher time frames. You can swing trade it. You can really do whatever you want, but it's always nice because of how it moves. Now, I'm newer to trading gold, but I do understand lot sizes and I understand market structure. So it wasn't really hard for me to transition into trading gold. I day trade gold and I sometimes scalp. So today we're going to talk about gold lot sizes because if you are used to trading something else like Forex, it will be a little bit different. And I don't want you to get in your trades over leveraging, putting in too much money just because you didn't understand the conversion or how the pips count actually works with gold. So we're going to be on Trade Locker today. And right now, I just have my trade panel open. And I'm going to be using a flat number like 2000. Just so as we move through the example, the numbers are pretty easy to follow. Now, if you were going to be trading Forex, let's just say you were going to trade something like Euro USD and you were to put 0.01 lots, that is 10 cents per pip. So if the market were to move 10 pips, you would make or lose $1, right? If that makes sense, just go ahead and drop a 7 in the chat. Now, when it comes to gold, if you're using 0.01 lots, you're actually only using 1 cent. So the first thing you should notate about gold and its lot sizes is that it is true value. If you see 0.01 in the lots box, that means you are literally entering this trade with a 1 cent risk. Now to break this down, let's just say the price of gold was at 2000. And we set our ticks, right, or pips to 1, right? We're only saying the market is going to move 1 pip. And we have our lot size at 0.01. We can see that our potential profit would only be 1 cent. And that's because 0.01 for gold is 1 cent. Now let's just put our stop loss and say our stop loss is the same thing. If the market went against us 1 pip, we will only be losing 1 cent. Now let's say the market went up 100 pips, right? If the market were to move up or down, we will be making or losing only $1 because 100 pips times 1 cent is only going to be $1. Now, if you were again trading a currency, if the market were to move 100 pips at 10 cents, you would be making $10. If that makes sense, go ahead and drop a 7 in the chat. Now, let's say the market moved 1,000 pips, right? So 1,000 pips from 2,000 would be 2,010, right? We literally just added 1,000 pips to the price. And on a 1 cent risk, we could make or lose $10. Now, if you're thinking about it in terms of currencies, sometimes the markets can take weeks to move 1,000 pips. But for gold, it's actually pretty common, right? It's actually pretty common. And I'm going to show you on the 15-minute time frame what 1,000 pips looks like. So I'm going to get a horizontal line. I'm going to put this line at 2659. And then our next line should be at 2649. Right? So that's about 1,000 pips. And you can see how you can secure 1,000 pips in as little as 1 hour, right? 976 in as little as 1 hour. So you could use 1 cent, and in 1 hour, you could make $10 if the market were to move 1,000 pips. Now, let's just say you wanted to use 50 cents in this trade, right? If you wanted to use 50 cents in this trade and the market moved 1,000 pips, right? You could make or lose $500, right? Just because you used a higher risk amount. Now, if this were Euro USD, this would not be 50 cents per pip. This would be $5 per pip. And again, I don't want you to over leverage in your trades. Now, if you have the capital to enter 50 cents in a gold trade, usually your broker will let you know if it's possible. It'll let you know if you're going above your margins or beyond your margins. But if you can, you see how quickly you are able to make a profit off of a small market move. Now, if I were to try to risk $1 in this trade, right, off of the same 1,000 pips, the same market move, of course, we will be able to secure $1,000, right? If we had a 1-to-1 risk to reward ratio for our take profit and our stop loss. And that's such a small market move. Imagine if you actually wanted to hold your trades for longer and you had the capital and you knew how to manage your risk, right? If you know how to manage your risk, you would be able to be very profitable off of gold. So the purpose of this video is to let you know that you don't have to risk so much on gold. You can risk as little as 1 cent, 2 cent, 3 cent, and you'll still be able to secure a decent amount of profit in a decent amount of time. No matter if you decide to scalp it or day trade it, there are so many opportunities on gold. Once you get into trading it or practicing it, you'll see how many opportunities there actually are. So I do encourage you guys to get on the charts, back test gold, and really see what you would have made or could have made by being patient and waiting for the market to hit TP, right? And 1,000 pips is a lot. You can use 300 pips, 400 pips, 500 pips. Play around with different numbers, play around with different lot sizes, and then don't be afraid to get in your live account and practice whenever you're ready. But that's really all I have for you guys today. Until next time, rich friends.